Mic check and screen share check, please. All right, let's go ahead and get started. This is the Saturday night podcast for Tortoise Capital for June 25th, 2022. We'll start with Chi-Weng Chung's Z-score indicators for the sectors. All right, so we're checking the S&P and the regression line 30 slope score and taking the Z-score of their slopes and then comparing that to S&P tech, finance, materials, and energy. And these are the four sectors that typically oscillate a lot, and they quite often take turns being in the lead. Like here, finance was the worst, and then finance became tied for the best once energy started to slip. Energy had been the best by far and is now the worst by far after an excursion to plus 2Z and is now beyond 2Z. So the energy sector is extraordinarily volatile. Now, throughout this period, the tech and finance were tracking the S&P pretty closely. With the turnaround in tech happening here and accelerating it to the upside. Materials had been the relative winner here, but now not so much. Materials are now in second place. So we're seeing a rotation away from materials. That helps explain some of the harsh sell-off in the steel companies that are giving us tactical opportunities. So this is just to show how extreme that sell-off in energy was. We saw that on the weekend report, how far off their previous highs all the energies have become. So there was nice swing trade opportunities on the upside here. When that stops being an advantage, we need stops that allow us to capture the up moves, to preserve those abnormal gains and avoid the retracements of exceptional gains. It's not unusual to see exceptional gains bring about exceptional relative losses. So there we are. Now, the little bump on Friday in the last 3 days has started to turn the market. Not enough to make that positive. It's just losing less ground. So it's important to remember we're still in a bearish normal. But tech is the clear leader on the way up so far. That's what you would expect to see. And that's the way we'll play it. In the comparison between like risk on and risk off between consumer discretionary and consumer staples, we're seeing that the discretionary in tech has a clear advantage over the more defensive plays. So that's why you're seeing things like Home Depot outperforming things like this is Home Depot against things like Walmart. And you can see big regimes when right now discretionary is better than staples. And that often results in this kind of gain in the S&P. when the discretionary ones, the growth seekers, are winning. And then that drags staples along. And then it's not unusual to see staples have the advantage and hold on to their value longer when things are selling off. So what's interesting to me here is to see if we're going to get this kind of almost like a Kata 2 formation and a short-term recovery. If that's the case, we would expect XOY to continue to do well. All right, we'll go through Ken H's multi-time frame swing trades. And I'm noticing that he's added the 10-day look back, the 5-day look back, and the 30-day look back to his structure. And then you can see how that manifests here. This is 10 days of hourly or 65-minute chart look back, and that's the 5 days. So you can see the high and the low. So you can see that real volatility in the last 5 days. It's almost as large as the 10-day volatility. So it's been extraordinary. This is Coinbase. And here's the key insight, is that the double bottom and then a higher low is what creates the conditions for a Kata 2. He gets it as it crosses the dragon instead of waiting for the PSAR. And he has banked a nice trade here. My stop would be around 60 to give it room to continue to run. It's got to close that gap and then get above this hump at 70 for us to have real strong confidence. So, I mean, I think you're okay on just a single position and letting it run, but Coinbase and all of the financial disruptors have been so volatile that I think it's more important that you lock that gain in from here. And I wouldn't be offended if you were even nudged your stop a little higher to 62 and just say, hey, I want to capture that move, because that's been the size of the move. And this is the natural break point here. It has to get above that 62, 63, I would say, to have a run at 80. So nice trade so far. Attend to your stop. And then you can just see on the weekly just how much that is. I mean, we're talking about an 80% sell-off on the weekly basis. So this could be, I mean, if this looks like the place where the double bottom is holding at 50 is the value play here, the line in the sand. Now it's got to get above this 72. And then this goes pretty fast. I mean, that was a harsh 3-day sell-off from 120 to 70. I mean, that's pretty painful. So we got to get above this resistance first, and then we have a chance for nice moves. Triple finance, nicely played here on the Kata 2 on the hourly. Perfect. Ran up nicely and held. There was no weakness whatsoever on that on Friday. So we would not be surprised to see that continue. And it has quite a bit of room to run to get back to the 10-day high. And there's no resistance in here. So really, once it gets past this little resistance, call that at 71, this is off to the races. So I think I'd be looking at a second position right about there with a target of here. And you can see how harshly finance has been treated. It's given back all of the outsized gains, but this might be the natural turning point right here. Holding at 60. So great timing. Getting that wedge in early now gives you freedom and some capital to play with. Qs, same posture. Notice he gets the, I think this was caching, if I remember that right. That would have been in here. Yeah, I think you had this and then an exit somewhere around in here. And then waiting to see the bottom, then the SSC, and this becomes a COTA 2. Both of those deep in the money. And with tech being the leader, I think I would be ready for a third position right here and ready to go. With the idea that it's going to close that gap pretty fast. There's no resistance. The first resistance you'll see is around 307. So I draw that straight. So I think 307 is the target. But otherwise, I think my stop would be like right about there, underneath that little sell-off. I think it'd be right about, call that 291, and give it some room to run. That feels a little tight to me, but certainly not more than this. Oh, you were short on that one and covered? Hopefully covered around in here. Wow. even more better. Walmart. Now, Walmart is always of interest as a trading vehicle. So I like to see the, where the weekly dimensions are, trading between 150 and 135. That's a 10% swing. And then when that breaks, you get another huge move down. And now, can it hold here? It's trying to. And here's the double bottom, COTA 2. This held pretty nicely. So I like that as a zero state breakout. And then if it gets above the 10-day high, you got to think it's aiming for 127. So I see that as about a $4 gain on about maybe $1 of risk. That's nice to the upside. Then the downside, I think that you could trade that in both directions. So we just want to see what the market is going to indicate on Monday. And that's one that responds well in both directions. Merck, the healthcare has just been en fuego, and you can see that on the weekly, COTA 2 got really well paid. And then this huge sell-off and big time gain. Wow. What a week healthcare and Merck had last week. And this is why you want to pay attention to the movers. Find the movers. This held pretty well at the top of the stack, but at the same time, I also acknowledge that's an easy place for people to start bailing if there's no follow through, and everybody that bought down around in here and here and here is going to be looking to preserve those gains. So you could see this tumble pretty quick. So I think that's actually a tradable move to the downside. And if you don't have a position in this already, I do think this is a nice zero state trade in either direction, because the frame is small and the rewards are large. Alcoa shows the pain and suffering in XLB, that huge sell-off. Oops. Come on, pen. That huge sell-off. When this collapsed, that gap down and harsh selling, this was the one-day bounce that we played nicely on Friday in the, not just Alcoa, but was also Cliff and US Steel. All of the steels did that. Beautiful short here. And now I'm looking at this like a COTA 2, and all it has to do is get above 50, and this thing is really going to go. So I like front running that entry like right here. And then if it gets above 52, I think you could add, because now it's cleared the RL10. And then that's not much resistance. I think your next target then is a 10-day high at 57. And then it's easy to see how on broad market failure that this suffers down to 46. So you have a nice trade in either direction in Alcoa. Nike. consolidating around 111, 110. That's this area here. Holding nice support. And if that can hold, there's your nice breakout. Small resistance around 115. Then this big gap, it should get through that quickly back to the next resistance around 120. So when they can get through these little regions of resistance, then the breakout that starts from here is large. So getting an entry here allows you to come up and then see what it's going to do at resistance. If it starts to fail, just cash it and take the win. But if it breaks through there, you could look at adding a second position beyond 116, then have a really nice swing trade up to 120. The downside is easy to see also. It gets back to 109 and 106 pretty fast. So that looks good. Chevron showing the weakness that kind of dramatically emerged in the energy sector, going from 180 to 140 within a week. Nice rebound on Friday and held, but this is still early days, and the energy sector itself is so bruised. This is unlike tech. This thing can move independently from the market. In fact, when energy goes down at this point, that actually is going to help the market go up because of reduced energy prices. So would not be surprised to see a sharp move in either direction out of here. And I like the tight frame, about a 50 cent or $1 risk. There is pretty good shape. WCC, Wesco International Industrial Distribution. And this looks a lot like, the business cycle that got smashed from inflation and has found local support, had a one-day pop, zero state. So yeah, you could see it break out in either direction and just follow the money on this one, follow the trade. And notice how chaotic this market is here, between 100 and 140, and just no follow through week to week. But that sets up on daily and hourly charts these very nice swings. So if you can time the swings, get paid in the kata twos, exit on 1-2 or 1-2-3 exits, you can make bank on those large swings, and the swings are getting larger, not smaller. Notice how this, if we drew this as the center line, that the size and magnitude of the moves are getting larger in both directions. So that tells you that the oscillations are still in play, and strong move available either direction. And finally, Brazil in Godzilla formation. It did not participate in the run-up on Friday, so further failure would not be a surprise, or a 1 day late to the party and rebound would also be possible. So you have a nice tight risk box down here at the end of a Godzilla move, and that is ideal. We're going to see Brazil in play all week. So let's stay with this one and see how it goes. All right, that's everything I got for us. We'll get this published and posted, and tomorrow morning, 10 a.m. Central Time, is the one of the 2 weekend sessions for Creativity 202. That's really that's the best time for the Euro guys to go to meet at 10, and then the Monday night session will be at 7 for the U.S. zone. And Creativity 202 students are obviously invited to both of them. So take good care. That's everything I got. We shall see you tomorrow.